All right, what we want to do, let me break this down a little bit. Here's two sell retracements this morning on crude. I'll mark them with an arrow for you so you can see them. What we do is we use this black market profile chart and also this white, what's called J signal chart with these Fibonacci dots. We use these two charts to find support and resistance. So what we do is once they show us where support and resistance is, then we use this gray template, which is market delta. It looks at the inside of the market between the bid and the ask, and it tells us if we have a buy or sell imbalance. You can't put market delta in front of market profile. It's vice versa. You put market profile first. It's worked since 1985. It called this level almost to the exact tick this morning on both of them on the retracements. They work really, really well with retracements, with trend direction, and they use a market delta to fire us in the trade once we get an order imbalance at these key levels. The key for you to have success in this trading room is letting market profile between these two charts set the trade up, and then letting market delta, this gray template, pulling yourself in with a sell signal. So let's just go over the setups, how we look for stacked areas. The one thing to have success in this room, you must look for stacked areas. Let me break this down a little bit. We have a solid red line on the black chart. We have a solid blue line, and we have a solid green line. The solid red line, anything you see red on my black or my white chart, anything red lines are called high value area. These are value areas. The dotted lines are more price based. The solid lines more volume based. So in this black chart, I got two profiles working for me. I got more price based and more volume based profile. All right. So anything red between the black and the white chart is considered high value. When I talk about high value, that's what I'm talking about. Anything blue is considered the control point. This volume-based control point right here, the solid blue line, that's the most volume that's been trading in the current session in crude oil. That's the highest volume that's been trading currently. The average has been 41.28. It's called the control. You come down here to the green line, that is the low value area. Anything green between the white and the black chart is considered low value. I have a solid green, solid blue, solid red, high value control, low value area. What we do is what we like to see with my arrow pointing up here that I'm on right now, we like to see stacked areas. I like to see when my profile here, my profile and more price, which is the dotted static line. The solid red line will move the price and then it will lock itself in when price gets away from it. And you can trade that as a retracement trade. When those two conflue or stack over top of each other, it's called confluence or called a stacked area. Stacked areas are like brick walls. They're very hard to get through with price on all markets. Now, this setup not only works in crude and gold that we show in the room, it works on all markets right across the board. So it doesn't matter what you trade, doesn't matter what it is, what market. Trade the QM, you can trade NASDAQ futures, S&P 500, S&P 400, British pound. Doesn't matter what you trade, euro, any currency, any futures, any forex, and any stock. Okay? You look for stacked areas. So when you use this black chart, you're looking for volume and price to overlap and lock itself in. So this is a really lay down trade for you traders right here at this level because you got two stacked areas and the trend is down. I'll show you how to establish trend. And what we do then, if you look when you have the retracement, you want to come in within 2 ticks of this black chart, 2 ticks of price or volume profile. If they're within a couple ticks, that's called a stacked or confluence area. Okay? When you come within 2 ticks, I want you to use market delta then. Market delta is this gray template. It's already set up for you for your own ninja charts, or you can view them in the live room here if you don't wish to set up on your own charts. Anything with a number of over 200 is a major buy or sell imbalance. Red indicating sell. My Renko bar that we only use a Renko bar. We don't use tick charts, volume charts, share charts. minute charts. Minutes are very lagging on market delta. We have our proprietary Renko bar we use. On crude oil, I use a 5-sim Renko only. I don't use any other Renko bar. I only use a 5-sim Renko. Anything over 200 is a major sell imbalance on crude if it's red. Anything over 200 in green would be a major buy imbalance. Hey, Will. So what we're trying to do, Will, if you're late getting in, buddy, we got this recorded for you, and you can come back and look at it when Gerald sends it out to you later this afternoon, or it'll be on our website. So what we want to do is we want to look to sell when 201 closes, with this red bar closes. You want to come within 2 ticks of volume and price. Once it closes, negative 201, you want to open your position short. Once you open your position short, we do not risk more than 15 ticks on gold and crude. Okay, gold and crude move within dollar increments. In between those dollar increments, between 47, let's say $48 a barrel, there are 100 ticks in between that dollar barrel. Each tick is represented by $10 per tick. We don't risk more than 15 ticks catastrophic stop when we enter the trade. So when it closes red within 2 ticks of a stacked area with trend, you enter the order. You don't want to use a market order. You can sell the bid, or you can sell the offer if you're trying to get a great fill on it on a limit order. What we do is we have a hard 15 tick stop. After your entry, I want you to place your stop on Chart Trader, drag it down 2 ticks above that swing high. So now you're going to drop your average stop for an average around $120 to $130 per tick. You're going to save 2 or 3 ticks depending on your fill by dragging it 2 ticks above that swing high when you're shorting. So I let it come within 2 ticks of this stacked area. Trend is down. I'll show you in a second how to establish trend. Trend's down. When it comes within 2 ticks of that stacked area, you look for negative market delta. You got negative market delta at 201. You enter after the close of that bar, you enter your position. You got a hard catastrophic stop of 15 ticks. Once you enter your position, you're short. Sell the bid or sell the offer. Do not use market orders. I suggest if you're new to the trading system, sell the bid. You'll pay a 1 tick premium, but it's better than not getting filled. Once you're filled, you can take Chart Trader and drag your stop 2 ticks above that swing high. Once you're above that swing high, you're now in the position. What we do is we let our position run. You can have your target's going to be the first set of symmetry dots, which is over here on this white chart. So the first set of symmetry dots over here on this white chart were the blue set of symmetry dots. Here's your first target. You want to sell within 2 ticks of the first set of symmetry. So here's your short. There's your short on market profile, 2 times stacked. These Fibonacci dots make it 3 times stacked. I'll go over that in a second. These 2 charts feed off each other. This is a Fibonacci retracement at a stacked area. 3 times confluent short, almost 4 times with developing profile. So that's a really nice trade. Your target's going to be 2 ticks within symmetry dots. So you're going to scale out 2 ticks above symmetry dots right here. These are these blue dots. Your second set of symmetry dots are down here. That's your overall target on your subsequent position. I use the symmetry dots to scale my position and its targets. Or you use the opposite set of market profile to get you out of the trade. You can see we went from HVA to LVA. That's a great place to get a majority of your position out and then let the runner run with the symmetry dot position over here also. Some traders like automated domes on their ATM machine. You can go for a 10 ticks. I would not go less than 10 ticks on a trade. You know, if you want to go 10 ticks, then break even +1, let the runner run, you can do that also. So what we're trying to do in the room then is we're trying to establish trend first. Now let me go over that. The easy way to establish trend is this. Moving averages to me are worthless. You can't trade off of them as far as for support and resistance. I do like the 50-day moving average when the 20 crosses over on the first retest. That's about it. Other than that, I look for trend. The easier way to look for trend, we had huge sell set up here, made a lot of ticks, a lot of traders in the room made a lot of ticks with the system, is because it's magenta MA. If this magenta MA is angled down, you only sell. If it's angled up, you only look for buy retracements. So the magenta MA, if it's angled down, you are in a seller's market. If it's angled up, you are in a buyer's market. If it's flat as a pancake, you're in a flat market, you sell the high and buy the low. I'll go over that in a second. So that's what we try to do. We try to establish trend first, and then we look for retracements. As you can tell, we've been trending down all morning. Trending down all morning. We had a 4 o'clock HVA sell here, and now we just had an HVL sell here, and we had a recent sell here. So the bottom line has been a seller's market this morning. So what we do is we look for sell retracements into stacked areas of volume and price and developing over here in my white chart. And then we look for market delta to pop us in the trade to get us short. And that's exactly how we trade the system every single day. Look for volume price over here on the white chart. I have developing. It's red and green. Red HVA. Green is LVA. When they stack within a couple ticks of each other, you have confluence. Right now, we have confluence between the control and LVA for another possible sell setup. So the bottom line is what we're trying to do is we establish trend first. We've been in a downtrend, and this template's already set up for your own charts. That's a seller's market. Here, this is a buyer's market all morning yesterday. Buyer's market. Buyer's market. You don't sell. Use that magenta MA, seller's market. This is a seller's market. Okay, when you look at this black chart, you quickly are going to see how this works. Very simple. If you look at it, this is a buyer's market. Buyer's market. Buy retracements. Seller's market. Sell retracements. Flat market. Buy the high, sell the low, high value, low value. This is a flat market. This is a vertical market. This is a vertical. This is a flat. It goes vertical to flat, vertical to flat. This is a vertical. And it flattens out. Sell the high, buy the low. Then it goes vertical again. So you can see the best way to trade this, the best way to trade this, if the trend is down, sell retracements. Period. Sell retracements with negative market delta. If your trend is up, buy retracements with positive market delta. Don't make it any more difficult than that. Okay?